Welcome. This is Erin Swenlin from DecisionPoint.com bringing you your daily 5. I'm going to show you the 5 charts that I think are the most important for you to see this very day. Before I get started, though, I did want to let you know that at DecisionPoint.com we have 2 reports, the Decision Point Alert and Decision Point Diamonds. The charts you're going to see today are from both of those reports. And if you would like to try it out for 2 free weeks, go ahead and use the coupon code DPTrial2 at checkout, and you'll get 2 free weeks to try us out and see what you think. All right, let's go ahead and start with the most important chart, of course, and that is the S&P 500, the SPY. This is our 5-month chart. What I wanted to point out is we had a very parabolic rally going into this particular time of digestion is what we're looking for. We still could see a move down to that 425 level, because when you get a parabolic formation, when they break down, they tend to break down quickly. This one broke down fairly fast, not as quick as we've seen some, but a lot of times you're going to get a couple of days of action, and it's going to bring you right down about halfway down through that pattern, that parabolic pattern. So halfway down this pattern would bring us right around 425. So we're still looking for some more decline this week, possibly some consolidation, but basically we don't think that this particular rally has been digested. Once it's digested, we're looking for higher prices. So we have been fairly bearish, but right now we are very short-term bearish. But after that move and that digestion period, we're expecting prices to move higher from here. Swenlin Trading Oscillators and our ITBM and ITVM. So the Swenlin Trading Oscillators are our short-term indicators, and the ITBM and the ITVM are intermediate term indicators. And as you can see, the STOs pulled back greatly last week and now are really sitting in some oversold territory. They certainly can get more oversold, and that's really what we're waiting for here, which is why we think we do still have some more digestion to go through here, more pause in the market. And after that, like I said, these indicators will be even more oversold, and that'll set us up nicely for the next leg up. The ITBM and ITVM started last week to confirm these short-term STOs as they were moving down. Let's go back. We're not done with this chart. All right, so the ITBM and ITVM started to finally confirm what was going on with these short-term indicators. And that told us again that we would expect more downside going into this week. The Golden and Silver Cross Index, which are our newish exclusive indicators here at DecisionPoint.com. We are going to unveil these most likely this week on Making Money with Charles Payne. We don't have the exact date, but if you go to our website, our homepage, you can sign up for a free email list, and we will let you know when Erin, myself, will be on Making Money with Charles Payne on Fox Business this particular week. But these particular indicators are really something we're very excited about, and I think are really giving us the kind of insight into the market that we need. So the Golden Cross Index, I'll start with that, measures how many stocks have a 50-day EMA above the 200-day EMA. So we basically look at all the stocks within the index, and we count up basically how many stocks have a 50 sitting above the 200-day EMA, or they're on a golden cross, as we call it. So you can see where the participation lies there. We also do the Silver Cross Index, and this is the one we're finding to be very prescient. It also is giving us some pretty good ideas of what participation is, and it really indicates what was going on when we were bearish. So it was a unique situation. Obviously, it didn't turn out into a big decline as we had thought, but I'll explain that shortly. We also take a look at how many stocks are above their 20, 50, and 200-day EMAs within the index. And we take these numbers and we compare them to the numbers that we see for the Silver Cross Index and the Golden Cross Index. And if these percentages are, like in this case, lower than the Silver Cross Index, that means that the Silver Cross Index is likely going to continue lower. And we did see a top last week. Again, this is really indicative of the pullback we're experiencing in the market. Certainly, the Silver Cross Index topping this early could indicate that we're going to end up with more than just a digestion phase. But that last chart we looked at, those Swenlin trading oscillators are getting oversold. And so we're thinking that this is more characteristic of the decline that's happening, but that we do expect to see it turn back up, similar to what we saw back here. We had a turning down of the Silver Cross, and then it started back up again. So that very well could be what we see, or we might get that bearish shift below the signal line, and that would give us a bit more to think about as to whether the market would be done with its decline. But at this point, really, we're getting this mechanical pullback. We had a parabolic rally. It was time to digest it. That's what's going on. And the Silver Cross Index is really indicative of that going on. Remember, too, that the Silver Cross Index is more of an intermediate term indicator. So we could see this turn down like it did near the end of this move, rather than at the beginning of the move. So we're looking at this again. I keep saying it, but I think it's an important concept. We do believe that we are in pullback mode, but we're not looking for really a deep correction at this point. We're just looking for something to bring all of our indicators out of overbought territory, like we've seen with our short-term Swenlin trading oscillators. Now, with the Golden Cross Index, it is still moving. It's moving mostly sideways. It kind of topped a little bit last week. And looking at the percentages of stocks above their 50 and 200-day EMAs, we have a percentage, one of them, over the 50-day EMA above the Golden Cross Index. It's really not enough to get too excited about. We are thinking that the Golden Cross Index will start moving down, just based on the fact that we are seeing these percentages moving much lower. So we will keep an eye on that, but more than likely, this is, like I said, a very long-term indicator, and we aren't bearish in the long term. So we're not really expecting to see a shift beneath that signal line. All right, so let's look at some of the sectors here, or a sector. Healthcare was my sector to watch going into this week. I still think healthcare is set up pretty nicely. So I'm going to show you that chart and explain why I felt like this one was set up well. Certainly pulling back today, so that wasn't a very good sign. And we are seeing that rising trend starting to be broken. But I will tell you that I picked healthcare because only two sectors really were showing rising momentum, and that was healthcare and consumer staples. Consumer staples still looks fairly good, but again, all of these sectors are in pullback mode. So we're going to see some broken rising trends. In the case of healthcare, like I said, we had the rising trend going on, but more importantly, at the end of the day on Friday, we had percentages of stocks above their 20, 50, and 200-day EMAs. We had all of those percentages at or above 50%. And that is our bullish threshold. Now, we don't have that for the Silver Cross Index and the Golden Cross Index, but this seemed to me a pretty early point in this move. But you can see that price is getting stuck beneath this declining tops trend line. So there are a couple of issues that we have to deal with on healthcare. I did want to bring a stock to you. It is not from the healthcare industry or sector, even though it is got med in its name and its symbol. It is called Medifast, and I like them. They are in consumer staples, which is the other sector that I do like right now. So I figured it would be a good one to bring. The chart really looks good. even with the pullback. So I wanted to show that to you. But you can see when we start just by looking at price, we have a really nice rally going on here. We've still got the price rising on a nice steep rising trend, rounded bottom here really, that's setting up a nice base for a breakout, in my opinion. You've got the RSI, which is positive. You have the PMO, which is rising, putting more distance between it and its signal line. And stochastics are above 80. As long as stochastics stay above 80, I'm happy, because that means you're likely in a really strong rising trend. So the last thing I wanted to show was the relative strength. I compare the sector to the SPY, and you can see that that's running about even. And I compare the symbol to the SPY and the industry group itself. And you can see that Medifast is doing well against its industry group, and therefore it is doing better than the SPY right now. So I like Medifast, MED, as a name to consider this week. That's all I have for your Daily 5. Again, my name was Erin Swenlin with DecisionPoint.com. Check us out and use that free trial using coupon code DP Trial number 2. So DP Trial 2, and you'll get 2 free weeks of our reports.